Hello, Tim Tucker here from United Way Central Ohio Tax Time Training. In this video, we are going to discuss the Ohio Unreimbursed Medical and Healthcare Expenses Deduction. In this video, we will cover the following. What is this deduction? What expenses qualify? And how do we enter the expenses into tax layer? And before we get too far along, I would like to say that this deduction is a subtraction from income before the tax is calculated. So in cases where the taxpayer's taxable income is below the threshold of taxability in Ohio, it's not going to help the situation, although it's not going to hurt either. What is the deduction? The IT 1040 definition is shown here. It's basically a deduction of certain insurance and healthcare expenses which can reduce your Ohio taxable income. Since it's such a mouthful to say the full name, going forward we'll refer to this simply as the unreimbursed medical deduction. What expenses qualify? There's a worksheet in the Ohio IT 1040 instructions which defines these expenses. It basically boils down to 4 different buckets of expenses. Since it's a little bit complicated, we're going to go through in the next few slides and describe what expenses go into what bucket. And then later on in this video, we'll explain how to actually enter these expenses. Let's look closer at line 1. Line 1 basically represents post-tax dollars spent on medical, dental, vision insurance where you paid the entire premium and were not eligible for employer coverage or Medicare coverage. So the likely expenses that you'll see in this category are insurance premiums for COBRA insurance and insurance premiums for marketplace insurance, Obamacare, but not including any premium tax credit that was paid. This does not include premiums for health insurance where your employer was providing the insurance and you had to pay a small amount, or insurance premiums for Medicare. It's likely you won't see too many taxpayers that have insurance premiums that fall into this category. Line 2 is for long-term care insurance premiums paid for with post-tax dollars. Like line 1, expenses in this category are 100% deductible, but we are unlikely to see any clients who buy long-term care insurance. So I'm not going to be mentioning this any further in our slides or in the examples I show later on. Line 3 represents post-tax insurance premiums you pay while eligible for Medicare or an employer health plan. In other words, you are subsidized. The combined expenses of this line and line 4, which we'll talk about next, are deductible only to the extent they exceed 7.5% of your federal AGI. These expenses include Medicare, Medicare supplement plan, premiums, and your share of insurance premiums that you pay for when getting insurance through an employer. Line 4 represents post-tax healthcare expenses for which you are not reimbursed, in other words, out-of-pocket expenses. The combined expenses of this line and line 3 are deductible only to the extent they exceed 7.5% of your federal AGI. We'll see some examples of this later on. So these expenses can include copays, coinsurance, and any other out-of-pocket healthcare expenses, prescription drug expenses, hearing aids, prescription glasses, things like that. How do we enter our expenses? There are a few ways to do this. I'll show you what I believe is the best way because it provides a nice record in the return and it's not too complicated, although there's a couple little twists. Normally, we only fill in Federal Schedule A when we think itemizing deductions will benefit the taxpayer. In this case, however, regardless of whether we itemize or not, we're going to add our expenses into Schedule A, and then the expenses will automatically carry over to the Ohio Unreimbursed Medical Worksheet as shown in this picture. I'll explain more in the next several slides how this mapping works. Don't be alarmed that you don't see a carryover to worksheet line 3 right now. We'll explain later. Let's drill down a little bit into how we actually enter the expenses into Schedule A. So for Medicare premiums, these will get entered when you key in the SSA 1099 Social Security form. They automatically carry it over to Schedule A, so you don't actually have to go in and put them there. No explicit action needed. These will then transfer to the unreimbursed medical worksheet on line 3. For medical, dental, vision, prescription expenses, your copays, your co-insurances, your glasses, things like that, you'll enter these into the appropriate section of Schedule A as you normally would if you were going to itemize deductions. There's fields for all these things. These will then eventually transfer to the worksheet line 4. For ACA, in other words, marketplace insurance and COBRA insurance premiums, we will enter these into the insurance premium section of Schedule A. These will then transfer to the worksheet line 1. The odd man out is the subsidized insurance premiums. This is, for example, what the employees share of insurance premium when they're part of an employer-provided health insurance plan. We're not going to enter these into the insurance premium section. And the reason we're not going to do that is because the insurance premium section actually transfers to the worksheet line 1. That's the 100% deductible. And the subsidized insurance premiums need to go into a bucket for where the premium is deductible only to the extent it exceeds 7.5% of the AGI. So what we're going to do is a slight fudge. We're going to put it into something called other medical expenses, and this will then transfer to the worksheet line 4. Ideally, we'd like this to go onto the line 3, but bottom line is the combined line 3 and 4 is what gets subject to the 7.5% AGI. So it doesn't really matter whether they land on line 3 or line 4. And if you really wanted to go on to line 3, if you look at our Ohio income tax return adders FAQ, we've got details in there on how to go in and monkey around with the worksheet. So let's go through some practical examples to see how this works in various situations. Let's start with a simple example, one that is very likely that you will see. This client has Medicare insurance and has some medical expenses. The Medicare insurance premiums are as shown on the 1099, the SSA 1099, $1,800 for Medicare Part B. And they come in and they've got records that show some medical expenses, prescription drugs, $2,000, medical copays, $3,000, prescription glasses, $900, and dental work of $1,700. So let's go ahead and see how that would actually get entered into Schedule A. Let's go ahead and enter this information into Schedule A. So what I'm going to do is go to Deductions, and then Itemize Deductions, Medical, Dental, and Vision Expenses. So let's start with the amounts paid to providers, doctors, dentists, etc. So since I've got several of them, I'm going to go into the hamburger menu, and I will say the doctor copays, and for that we had $3,000. And we had another item for dental. This is probably for a crown based on how much I put in here, 1,700. So that's it for the doctors and dentists. So let me continue here, and I'm going to put an entry, but several entries under prescriptions. We're going to do prescription drugs, and for prescription drugs, I had $2,000. And this is sort of arbitrary, but I put the glasses in here as well because they're prescription. So prescription glasses for $900. Okay. So this is what my Schedule A looks like so far. Let me continue, and let me click on this little print item. Let me see what this looks like right now. So what it shows right now is the total of, and this actually 9,400 is the sum of the Medicare insurance premium plus all those expenses I listed. That's $9,400. And for federal, when you compare it against the 7.5%, you see you get $6,400. So it wouldn't make sense for this person to itemize. And there's just a little summary down here that it prints out. And now that we have the Schedule A information entered, let's go ahead and pull in the unreimbursed income, unreimbursed medical to the Ohio return. So we're going to go to the state section and edit. And we're going to skip the retirement income credit. Now, normally the tax layer will ask you if you want to do the unreimbursed healthcare subtraction worksheet. And so at this point, I was like, go ahead and say yes. If you answer no and later want to go in and do it, I'll show you how you would do that. So I'll go yes. You have to answer this question yes. Do you want to complete the worksheet? If you answer no, it's not going to pull in the worksheet. So we're going to say yes. Now, in this case, there's nothing that we need to do beyond just checking this yes. There's some options down here where you can adjust things if they need to be tweaked. In this case, we do not have to do that. I will point out, and actually our FAQ points out cases where you could tweak that. And I mentioned before, putting things into the worksheet line 3, that's one of the ways you can do it. So for now, let's just take the simple case and let me continue. And continue. And I'm not sure why it keeps asking these questions, but at this point, let's jump out of here. Let's go ahead and see what this generated. So I'm going to click the print icon. And I know that the worksheet always gets put at the end of the return. So this is the completed worksheet. As you can see, the Medicare premiums got carried over to line 3. And the other healthcare expenses, prescription drugs, glasses, copays, and so on, they got put in line 4. So the total is $9,400. That gets compared against the 7.5% AGI. The difference is $6,400. That $6,400 then shows up as a deduction. So if we go up to our adjustments section in the return, we'll see the unreimbursed medical and dental healthcare expenses deduction of $6,400. We actually had Social Security, taxable Social Security is also deducted. So we had 2 deductions that will subtract from our taxable income of $40,000. That will reduce that by 16,296. So that's what the unreimbursed medical worksheet and the Ohio return looks like for this simple case. That from the first example, adding the unreimbursed medical worksheet is pretty straightforward for that simple case. We just entered information into Schedule A, same way as you would if you were itemizing deductions, and then the Ohio return, this is just a simple operation to say yes to turn on the unreimbursed worksheet. For example 2, we're going to modify example 1 slightly. It's the same Medicare and medical expenses. This time, the person also has a Medigap private insurance policy. So they're paying an additional $1,200, which covers much of the stuff that Medicare Part B does not cover. So for the second example, we have all the same itemized deductions as the first example, with the addition of this one Medigap policy insurance premium. So let's go back into itemized deductions, medical, dental, and vision expenses, and let's edit that. Now, as we mentioned before, when we have a Medigap policy, which is a policy that is part of the Medicare program, we need to treat that as a deduction that's going to be subject to the 7.5% AGI. And the little fudge we talked about before is we were going to put that into other medical expenses, because if we put that into the insurance premium, it's going to go into the wrong bucket. It's going to go into the 100% deductible. We don't want that. So I'm going to go into other medical expenses, click the hamburger menu so I can put a description, and I'm going to say Medigap insurance premium, and I will put in the amount of $1,200. When we generate the unreimbursed medical worksheet, for example 2, which is shown here on the right side of my screen, we can see that line 4 is now $8,800 Compare that to example 1, which I've got here on the left side of my screen, where the line 4 was $7,600. So this other $1,200 from the Medigap insurance now shows up at line 4. Let's look at another scenario. In example 3, we've replaced the Medicare insurance with COBRA insurance, and we left the same medical expenses in place for simplicity. Let's go ahead and update our Schedule A to include the COBRA insurance. So we'll go to our itemized deduction section, and we'll edit the medical dental section. And I've left in the copays and glasses and drugs, etc. I've taken out the Medigap insurance from our other medical expenses. So now what I'm going to do is I'm going to put the $10,000 into our insurance premium section. And that's the correct section because COBRA will transfer. We want that to show up in the 100% deductible bucket for Ohio unreimbursed medical. So let me put a comment in here. COBRA insurance premiums and $10,000. Continue. Now let's go ahead and jump to Ohio and edit that. Say no to retirement income credit, and just to show you how to get there, if you select no here and you go into the Ohio return, you could get to the unreimbursed medical by going to subtractions from income because it's a deduction. So we're going to go to begin, and it's all the way at the bottom, unreimbursed long-term care insurance premiums, health insurance. So we'll do begin, and we'll just click our checkbox yes, and that's all we need to do here. Continue. Now I'm just going to exit enough times to get out of this. Now let's go ahead and see what got generated on the worksheet. So print that Ohio return. I know it's all the way at the bottom. And here we see that the $10,000 correctly showed up into line 1, which is the part that is 100% deductible. And you can see that our overall deduction is now over $15,000, and that shows up right over here on reverse medical. Let's look at another scenario. In this example, the taxpayer has purchased marketplace insurance. We've kept all the medical, dental, prescription, so on the same, just for simplicity. Now what we need to do is enter the marketplace insurance premium. And we're going to enter that in the same way we did for COBRA. It's going to be in the insurance premium section of Schedule A because it's one of those things that goes in the 100% deductible bucket for Ohio. But the question is, how much do we actually put here? We need to put the actual out-of-pocket premium that was paid after we reconcile any premium tax credit. So let's look at how to do that. Continuing on with this example, here is a 1095-A I made up for this taxpayer. The numbers aren't so significant. I did create the numbers so that it would come out where this taxpayer got a small refund when everything was reconciled, and we'll see that in the next slide. After I enter this 1095-A information into TaxSlayer, TaxSlayer will produce the 8962. The 8962 that it produced is shown here, and this is where things get a little bit interesting, but just stick with me. So as we can see, the total cost of the policy, which I've got the blue line pointing to, is $4,092. That's how much it costs for this insurance policy. The green line shows the amount of advanced premium tax credit that got paid, $1,462. So the taxpayer was stuck paying the rest. So the taxpayer actually paid throughout the year that 4092 minus 1462, or 2630. So that's how much the taxpayer paid. Now, when things are reconciled with the 8962, it shows that the taxpayers actually do a little bit of money back because the premium tax credit that he was owed is bigger than the amount of advanced premium tax credit he got by $110. So even though he paid $26.30 throughout the year for his policy, he got $110 back. So his total out of pocket is actually $25.20. And we're going to use $25.20 in Schedule A for the amount of the insurance premium. This 8962 shows that the taxpayer did not get enough advance premium tax credit as he should have gotten, which is why it shows him getting a refund at the end of the year. Now, the situation could just as easily gone the other way, where the taxpayer got more advance premium tax credit than he was due, in which case he would owe some tax back at the end of the year. In that case, what we would do is we would add the amount that he had got taxed on at the end of the year to what he had paid throughout the year, and that would be the amount of the premiums that he paid out of pocket. Now that we know the marketplace premium that was paid, let's go ahead and enter that information into TaxSlayer. It turns out it's going to be entered in exactly the same way we did it for the COBRA insurance premiums. So we'll go into our itemized deductions and medical, dental, vision, edit that. And now we're going to put our marketplace insurance premium that we paid out of pocket into the insurance category. So we'll put our 2520, continue. And now let's go ahead and go to the Ohio return and see what the impact was on the unreimbursed medical worksheet. So I'll go ahead and print out the return and go to the end. And now we can see that that 2520 showed up in the correct bucket on line number 1. And we still have all our same old medical expenses here. As an academic exercise for those who are interested, let's revisit example 2. If you recall, for example 2, we had Medigap insurance, and we ended up entering that into Schedule A such that it transferred to the worksheet on line 4, which is kind of a fudge, but in the end, it doesn't matter in terms of the total deduction. Well, what if we want that to show up on line 3? How would we do that? Let's go ahead and update our itemized deductions and add in this Medigap insurance. So we'll go to itemized deductions, medical, dental, vision, etc. Edit. We've already got our medical copays, glasses, and so on in there. That's not changing. So now what we're going to do is we're going to put the Medigap premiums in the insurance premium bucket. So I put a description here of Medigap insurance premiums of $1,200. And we know that this is on the Ohio Unreimbursed. This is going to put things in the wrong line of the worksheet. Let's go ahead and I'll show you that. So I go to the state section, generate the PDF, go to the end. We will see it put the $1,200 here in worksheet line number 1, which is the line that's only reserved for things where you were not part of Medicare, non-subsidized. So we need to move that from line 1 and add it into line 3. So how do we do that? So let me go into Ohio. Not doing the retirement income. We'll say yes to the unreimbursed healthcare sheet. Now, on the bottom section of the sheet, there's the section here which is unreimbursed insurance premiums, which you were, sorry, it keeps jumping, which you are not eligible for Medicare. So this is the one, it got put into that accidentally, well, intentionally, because of the way we entered the Schedule A. So I'm going to go in here and I'm going to make an adjustment. I'm going to say subtract $1,200 from that box. Continue. Now, the second section here, we're going to add in that adjustment. This will put it onto line 3. And let's go ahead and get out of the Ohio return. And then let's generate the worksheet again, the PDF, and we'll see what it looks like. So now you can see line 1 is empty, and line 3 previously was $1,800. It's now $3,000. So now this worksheet accurately reflects the proper place that insurance should have gone. The net numbers don't change on the bottom line, but this looks a little bit more correct. This is the method that I don't recommend because it's a little bit wonky and more prone to error. And again, it's a little bit more. It's more work and more confusing for the same result. So I generally shy away from doing this, but this is how it can be done. And we have this documented in our Ohio Income Tax Return Adders FAQ if you want to revisit it. Thanks for watching. I hope this video was helpful. Links to our FAQs and useful websites are posted in the description below this video. If you have questions or comments, leave me a comment on my YouTube channel or ping me on Slack or send me email at timmythetaxman@gmail.com.